If you're under 35, and you've ever felt stupid watching your Robinhood account turn red, or you're sitting on cash too scared to invest in 2025, or you're just tired of TikTok gurus telling you to YOLO into meme coins, then keep watching. Because in the next few minutes, I'm going to hand you the exact same system that turned a broke 19-year-old kid from Omaha into the richest investor in history. My name is Value Genix. This channel exists for one reason only: to teach Gen Z and millennials how to invest like actual billionaires, without gambling, without FOMO, and without ever needing to check your phone every 5 minutes. Today is the full masterclass. We are covering Benjamin Graham's entire margin of safety philosophy from scratch, the one rule that protects your money in every market crash, from 1929 to the 2022 bear. Exactly how to find stocks trading 50 to 70% below their real value right now. The dead simple checklist Graham used to beat the market for 30 straight years. Real 2025 examples: Apple, Alibaba, Coca-Cola, Meta, and 5 hidden bargains that pass his test today. How to build your first $100,000 portfolio before age 30 using only Graham's rules. If you actually watch till the end and apply even 50% of this, you will never lose money in the stock market again. Hit the subscribe button right now and let's begin. Part 1. Who the hell was Benjamin Graham and why should you care in 2025? Let's go back to 1934. The world was broken. Unemployment 25%. Stock market down almost 90% from the 1929 peak. People jumping out of windows. Most experts were saying stocks would never recover. One 39-year-old college professor named Benjamin Graham looked at the same data and said the exact opposite. This is the greatest buying opportunity of our lifetime. He then took $450,000 of other people's money, about $10 million today, and over the next 20 years turned it into $25 million, while the overall market barely moved. That's a 20% compound annual return for 2 decades, during the worst economic period in American history. His students: Warren Buffett, Irving Kahn, Walter Schloss, Bill Ruan. Combined net worth today over $300 billion. Every single one of them became a billionaire using the exact rules you're about to learn today. Fast forward to November 2025, markets are frothy again. S&P at all-time highs, but cracks showing with Fed rate cuts stalling and geopolitical noise. Part 2. The one rule that changes everything: margin of safety. Graham's entire philosophy can be boiled down to 3 words: margin of safety. Imagine you're buying a house. The house is worth $500,000 all day long. But the seller is desperate and offers it to you for $300,000 cash. That $200,000 gap is your margin of safety. Even if the roof leaks, even if the market crashes, even if you overpaid a little, you're still going to be fine because you bought with a huge cushion. Stocks work exactly the same way. Every company has an intrinsic value, what it's really worth based on its earnings, assets, and cash flow. The stock price is what people are willing to pay today. When price is way below intrinsic value, huge margin of safety buy. When price is equal or above intrinsic value, no margin, stay away or sell. That single idea is responsible for literally hundreds of billions of dollars in wealth. And in 2025, with valuations stretched, it's more crucial than ever. Part 3, the 2025 Reality Check: Why Most Gen Z Investors Are Still Broke. Right now in November 2025. Tesla P/E ratio 270. Nvidia P/E ratio 45. Apple P/E ratio 36. S&P 500 average P/E 30. Benjamin Graham's maximum P/E he would ever pay? 15. That means the entire stock market right now is trading at almost double what Graham considered safe. No wonder 90% of Robinhood users under 30 lost money from 2021 to 2025. They bought with zero margin of safety, chasing Tesla at 1,000 P/E or Nvidia during the AI bubble peak. Meanwhile, the tiny 1% who waited for bargains quietly made 50 to 200% returns while everyone else panicked. Think Alibaba in 2022, down 80%, now up 150% from lows with a fat margin. Don't be the 90%. Part 4, Graham's 7 Golden Criteria, the exact checklist. Here are the 7 rules Graham demanded before buying any stock. Adequate size. Company revenue at least $100 million, old dollars equals $2 billion today. Avoid tiny penny stocks. Strong financial condition. Current assets at least 2 times current liabilities. Long-term debt less than net current assets. Earnings stability. Positive earnings for the last 10 years straight, no losses. Dividend record. Uninterrupted dividends for at least 20 years. Earnings growth. At least 33% earnings growth over the past 10 years. Moderate P/E ratio. Price to earnings below 15. Moderate price to book. Price to book below 1.5. Or PRE times P/B below 22.5 combined. If a stock passes all 7, Graham considered it an automatic buy when trading at 50 to 66% of intrinsic value. Drop margin of safety in the comments if you're ready to invest like Buffett.